All right, let's get into it. We're going to unpack a really fascinating company today, Darling Ingredients. And trust me, it's a true study in contrasts.
So what is this company? Is it a super stable, cash-generating machine? Or is it more of a high-risk, high-reward bet on the future of green energy? Well, from an investor's perspective, the wild thing is, it's both. And that's exactly what makes it such a puzzle.
You know, the best way to really wrap your head around Darling is to think of it as two completely different businesses mashed into one. You've got the ballast. This is the stable, predictable foundation. It's what keeps the ship steady. But then you've got the engine. This is the high-growth, super volatile part that's all about renewable fuels. It's powerful, but man, it can be unpredictable.
Okay, so first things first. Let's talk about that bedrock, the stable foundation of the business. We're talking about its huge, well-established operations in feed and food ingredients.
So, for more than 100 years, Darling's whole game has been turning waste into something valuable. They're basically the world's biggest recyclers of their kind. They collect stuff you wouldn't want to think about, inedible animal parts, used cooking oil, and they transform it into essential ingredients for feed, food, and even fuel. And the scale here is just staggering. We're talking about them processing something like 15% of the world's animal byproducts. That's huge.
Now, take a look at this. At first glance, you see that the fuel segment makes up just under 11% of their sales. And you might think, okay, so it's a pretty small piece of the pie, right? But here's the thing. That's totally misleading. Because when we start talking about what really moves the stock price, the profit, that little slice of the pie is the whole story.
And this is where you really see the power of that core business. It's all about stability. While the fuel side of things was getting hammered recently, guess what? The feed segment's profit? It actually grew by over 11%. That's the ballast doing its job, right? It's the cash-generating foundation that keeps things afloat, even when that high-powered engine is sputtering.
All right, so we've seen the stable side. Now let's flip the coin and look at the volatile growth engine. This is all about the fuel segment, and specifically their big joint venture, Diamond Green Diesel.
And this is where the drama really kicks in. A 44% drop. That's the year-over-year plunge in profit from their share of Diamond Green Diesel. This one number, this is what sent the stock tumbling. It's why investors are so nervous, and it pretty much explains all the pressure the company's been under.
So what in the world is causing all this chaos? How do you get a drop that big? Well, it's not as simple as supply and demand. The real answer is tangled up in the very complex world of government policy and these things called environmental credits.
Yeah, let me introduce you to something called RINs, Renewable Identification Numbers. The easiest way to think about them is like a government-mandated coupon or a subsidy that you get for producing green fuel. These RINs are a massive piece of the revenue puzzle for a renewable diesel producer. But here's the catch. Their price is notoriously volatile. It can jump up or crash down based on nothing more than a rumor or a policy whisper coming out of Washington.
And this is the absolute key takeaway. A huge chunk of their profit isn't tied to how good they are at making fuel. It's tied to this unpredictable political and regulatory world. I mean, don't just take my word for it. The company's own management squarely blames regulatory uncertainty for the downturn. They're basically saying the government isn't sending the right signals to keep the market stable.
And you can see the real-world impact right here. Just look at this chart. The profit they make on every single gallon of fuel, it completely collapsed. It fell all the way down to just 36 cents. This right here is what that volatile engine looks like when it backfires.
So with all this drama, you can see why this is such a headache for an investor, right? It creates this massive puzzle when you're trying to figure out, what is this stock actually worth? And this really brings the dilemma into sharp focus. If you look backwards at their earnings over the past year, the stock's PE ratio is up at 47. That looks wildly expensive. But if you look forward at what Wall Street thinks they're going to earn next year, the PE ratio is just 9.6. I mean, that looks like a steal. So which one is it? Is the past the right guide, or is the future? I mean, that is the multi-billion-dollar question, isn't it? Is the market right to expect this huge rebound? To answer that, you really have to weigh all the big long-term opportunities against some pretty serious and ongoing risks. Okay, let's look at the bull case, the argument for why this stock could absolutely soar, and it's a strong one. First, sustainable aviation fuel, or SAF. This is a massive policy-driven market, and Darling is a key player. Then there's a potential plan to spin off their super high-margin collagen business, which could unlock a ton of hidden value.
Plus, they're tapping into the whole humanization of pets trend with premium pet food ingredients. And underlying it all, they're a leader in the circular economy, which is a huge long-term tailwind.
But then there's the bear case. What could go wrong? And this side of the argument is powerful too. It all comes back to that profit engine being completely dependent on unpredictable government rules. You've got commodity price swings. They're what's known as a spread business, so they're vulnerable there. And oh, by the way, the competition, it's not exactly small fry. We're talking giants like Tyson Foods and even the major oil companies who are all jumping into the green fuel game.
So, in the end, you've got this constant tug-of-war happening inside one company. For any investor looking at Darling, it really boils down to one critical question. Which side is going to win? Will that stable, predictable ballast be strong enough to steady the ship? Or will the wild, unpredictable swings of the engine continue to dictate where the stock goes? That, right there, is the puzzle of Darling Ingredients.